I know you tired of working at 9 to 5. I know you are tired of sitting on the sideline, not making money, watching everybody else get promotions, get an increase. And this is the time. The time is now. I want to welcome everyone to a new year. Happy New Year to every generational investor across the globe. The one, the only Coach Flo, where I believe God has started us on a new journey, and He is preparing us for new relationships, new mindsets, preparing us for new promotion, increase. I believe 2026, this will be a year not like any other year. Give me a thumbs up if you believe like I believe. And today I want to talk about passive income, dividends. I'm buying these 3 dividends that is going to make us money. And before you leave, you know I'm finna drop some heat. I'm talking about gems, life, motivation, inspiration. So stay tuned. So the first one I want to talk about that I'm looking to continue to add to my portfolio is SCHD. That's right, SCHD. Diversification, is key. And SCHD has diversification. And I've been buying this last year, early in 2025, and started in 2024. But I took out some profits, and so I said, you know what, 2025, I'm going to start back buying more. And now this year and going into next year and the year after that, this one right here is going to really pay us. It's really going to pay us. And how much is going to pay us? Quarterly. That's right, quarterly. And like I say, do what's best for you. Don't go off for what I say. Don't go off for what these gurus say. Don't go off for what others. Do what's best for you. That is key when it comes to investing, because everybody's strategy, everybody's path is different to financial freedom. So remember, research, do your due diligence, because I'm not your financial advisor, but I'm here to encourage you, to employ you to this year. Just start investing. So SCHD pays quarterly and is heavily invested in healthcare, energy, industrials, tech, consumer defense. So that keeps it diversified. In times like these, when the market is going up, then it's going down, you got to stay diversified. You have to stay diversified. And SCHD, I believe, is one of my hot picks that I'm going to continue to add to my portfolio. Remember to do your due diligence and consider SCHD. Let's move on to QQQ. QQQ is one of these ETFs that is heavily packed with tech, and I'm heavily invested in tech. So individual stocks like Nvidia, Apple, Microsoft, Google, Tesla, I got all that. But QQQ has percentages in that one index fund. So that's for those who are new to the investing game. When you're talking about ETFs, it's diversification, but it's also a fund that has individual companies within that sector, within that index fund. Okay, so that's why if you're new to investing, I believe that you should get you some ETFs. That's going to keep your portfolio balanced when the market goes up, when it goes down. This right here keeps it balanced, and it keep you from really panicking. We have a lot of new investors who are starting, whether it was last year or it's going to start this year or just started a few months ago. The market has been volatile, and volatile means it goes up, goes down. It's like a roller coaster ride, because you just never know what's going on in the stock market. We got tariffs, you have inflation, all this data that the market reacts off of. And whether Trump posts something or he does something, it's going to react. And for those who are just started in the market, you have to be diversified. And that's why QQQ, that's why I'm continuing to add shares to my portfolio. And you say, Coach, I don't have that $300 or $400 that some of these ETFs or some of these stocks are offering. Don't worry, because fractional shares, I started in 2020. So I'm not just talking about this. I started fractional shares. You can fractional share as little as $1, as little as $5, as little as $10. Remember, you have to do what's best for you. Remember to always do your research, but do what's best for you. Don't worry about what your neighbor, what your coworker, what these people on these social media platforms are saying. You can get in the game. You don't have to just stay on the sideline and watch everybody continue to make money and continue to move up in a financial journey. So the key is starting fractional share. Let's move on to VUG. VUG, another ETF that is tech heavy. It has Apple, it has Nvidia, it has Meta and Amazon. One of their top holdings is very concentrated, and it's growth focused. This in companies expect to grow earnings at an above average rate. So this one right here, also tech heavy, and with AI, because I believe this year, like I've said in the past, this year, I believe AI is really going to break out. Going into this year, definitely next year, 2028, 2029, 2030, okay, have a lot of companies like Nvidia, which is the king of AI, in my opinion, along with the Apples and the Microsoft, Tesla and Google, okay, all these other companies, AI is going to break out. And so with that being said, VUG, QQQ, which is tech heavy, is going to perform well. When you're talking about ROI, return on investment, QQQ, VUG, you can't go wrong either one. I consider just having both. So that's like apples or oranges. You can have both. And how can you have both? Fractional share. And like I said, just do what's best for you, whether that's how often you get paid, every 2 weeks, every month. You can set it and forget it. It's all types of strategies. Dollar cost averaging is the way, because whether the market goes up, goes down, you put whatever set amount, whether that's $10, $50, $100 a week, a month, every 2 weeks, into these ETFs, and they're going to pay you. That's the number one thing besides diversification, but collecting these dividends. These dividends are going to pay you, and people live off of dividends. I'm talking about everyday individuals like you and I who been invested into these ETFs, and they are starting to see the results because of over time. They've been buying, and depending on how much they put into SDHD, depending on how much they put into QQQ or VUG, the dividend grows. It's called compound interest. That's how you create wealth. That is number one. They call that either the eighth wonder of the world is compound interest. When you put your money into these investments and they continue to grow, and I mean grow, and depending on how the market, right? If we're in a bull market, which I believe we're in a bull market since last year, it's going to grow. It's going to grow faster than a savings account. Remember, you got to have an emergency savings account or emergency savings fund. That is one of those main components of financial stability. But when you put your money into these assets, these vehicles that's going to move like the fastest moving car, your money is going to compile, and it's going to compile fast. And compound interest is going to push your money to the next level. So let me know in the comment below, are you invested into these ETFs? Will you start investing this year? Let me know by saying, give me a money sign, give me fire emojis. Let me know what ETFs are you invested in. If not these, which ones or do you see that will do well this year? And if you stay tuned towards this portion, now put that tax refund to use as we go into tax refund season, because people out here are going to be doing silly stuff, goofy stuff with their money, you know. But if you change your mindset, which I pray that you change your mindset this year, put your tax refund to use. Put that promotion for those who got that increase on their job, got a bonus, or doing overtime. Now it's time to put that money to use. And that's going to make you money. Why work 8, 10, 12 hours a day over 50 hours, some people 60 hours, 70 hours a week, right? And don't have nothing to show for it, or you working really harder than your money, when all honesty, your money should be working harder than you, or even more than you. Okay. So when it comes to money and when it comes to capital, they call it in this marketing world, your money should be working for you, working even much harder than you. You shouldn't be working harder than your money, because with inflation, things are only going to go up. That is not going to change. Things only going to go up, whether that's rent, whether that's groceries, whether that's daycare, whether that's insurance, mortgage, all that's only going to go up. So how can you combat this inflation? By putting your money into assets and things that's going to pay you. Let's move on to having a system. And this year, I pray that you develop a system. If you haven't developed a system, now's the time to evaluate strategic planning for your business, if you have a business or you desire to have a business, families, whether you have kids or don't have kids, you married, got a girlfriend, boyfriend, family, strategic planning for that. Finances, gotta have a system. Your money has to have a job. It can't just be paying for bills. Life is more than paying bills. Life is more than paying bills. So you say, Coach, I don't have, after I pay my rent and pay my mortgage, pay my car insurance, pay groceries, pay for daycare. Well, if you don't have much, consider budgeting, consider cutting back things that you don't need, and that's going to free up some cash. Okay. So, and maybe you might need to sell some things, but it's going to free up some cash. So having a system for relationships, whether, like I said, boyfriend, girlfriend, marriage, got kids, having a system for your relationships. And definitely number one, if you haven't prayed, I implore you, I encourage you to start praying this year, developing a strong relationship with God, because He has a plan for you. He has a plan for you. I mean, to really bless your socks off if you only knew what He has for you. But you have to do your part. Physical, for those who looking to lose weight, eat right. What's your plan? What's your system for that? Because I am looking to cut back on some things when it comes to eating out and what I'm eating, what I'm consuming, working out. Definitely, I'm going to encourage myself and be consistent with that. Mental and emotional health, with so much things, stress, family, life in general, finances. Gotta have a system, gotta have some type of outlet. And I'm talking about positive outlet, because what brings me to my third point, which is avoiding time wasters. Having a positive outlet, because these time wasters, they're going to mess your mindset up. Being around family, or I should say negative family members, toxic friends, because these are time wasters. People who haven't done what you are looking to do. People who haven't went anywhere, whether it's traveling to a different city, different country, and they telling you how you should move. People who haven't started a business, people who haven't stepped out and got their certification and got their education, degrees, all types of different additional skills, and they telling you how you should live your life. Think about it. Being stuck at that dead end job, okay? Being stuck at that dead end job, you know that you hate your job. And this is not for everybody, but you say, I'm tired of working this 9 to 5. I'm tired of working these 2 jobs, these 3 jobs. Now it's the time to look at these time wasters. Everybody out here who just trying to figure it out. And I'm not being judgmental, because at once upon a time, I was going out drinking and really do all that smoking. But you have people out there drinking and smoking and partying, which you have your moments. Don't get me wrong. But that is a time waster, because the things I know now, I wish I known back then. And I know for those who are a little bit older, they can tell you wasted so much time and money. And you are one of my younger viewers, you can learn a few things from me and older individuals. So time wasters, and I believe this year, 2026, as we embark on this financial journey, as we embark on different mindsets, new habits, I believe that this is a year. God is telling me this is a year for transformation. This is a year for revelation. And prayerfully, you can say 2026 was my best year. But how you're going to do that? It's about changing mindset, being consistent, evaluating, and really applying different types of disciplines, different types of habits to really make 2026 the best year of your life. And I pray that over you, your family, your friends, all of your aspirations and dreams that you have for yourself, 2026, because I have more in store. There's a lot of things I'm planning to bring to this podcast. So if you think that we just getting started, last year is behind us, 2026 is now with us. So smash that thumbs up, because I got more in store.